Most small business owners don't have a tax problem, but they have a timing problem. You will wait until April and then act surprised that the bill is huge. So I'm going to run you through the playbook that we run to keep taxes from turning into a cash flow crisis. 7 simple things that you can do in the right order that you can apply whether you're a small business owner, a coach, a contractor, agency, even a local business. My name is Don Markland. I'm the co-CEO of Noomii.com, where we work with thousands of coaches every single day, as well as I run my own business coaching firm, Accountability Now, where we are one of the largest and most successful business coaching firms in the United States. And quick disclaimer, I am not your CPA. I'm not going to give you tax advice. I'm giving you a decision checklist to make, and you can take it to your tax professional, because taxes are one of the easiest places to leak profit when you're growing. So let's go through it. There are only a few levers that actually change your tax outcome. What you buy, when you recognize income, when you recognize expenses, how you're structured, how you pay in throughout the year, and how you move money into long-term buckets, like retirement. Mostly everything else is just noise. So let's talk about those 7 levers. Lever number 1, know what you can expense this year. If you're buying equipment, tech, vehicles, or investing in the business, you need to know what qualifies for faster write-offs. Recent law changes expanded first-year expensing and related deductions in certain situations, but the rules are detailed, and states don't always follow the federal rules, so don't freestyle it. So for coaches or small businesses, laptops, phone use for business, cameras, lights, mics, software stack, that's your CRM, email, your tools and equipment for trades, certain improvements in build-outs. Those are great things. And so you should be asking yourself, what purchases can we expense faster? What counts as a placed in service this year? And does my state follow the same rules? Lever number 2, use timing. Defer revenue, accelerate expenses when it's allowed. If you operate on a cash basis, timing matters. And in the simplest of terms, that means if you have a big profit year, you may be able to push some revenue into next year and pull some expenses into this year. Make sure you're following the rules there, but it'll help. Or if you're having a low profit year, you may want to collect earlier daily expenses to get deductions when they'll matter more. So, for example, prepaying software for the year, paying contractors before year end, scheduling invoicing based on cash receipt timing. Again, rules matter here. But you need to ask yourself, am I cash-based or accrual? Do I have any legit revenue that we can defer? And any expenses that we can pull forward? Pulling forward expenses is one of your best ways to do this. Lever number 3, don't ignore losses. Plan them. If you're having a down year, the move isn't panic, the move is strategy. You may be able to carry certain losses forward to offset future income. Now, you do need to get your books clean and talk to your CPA early. This is not a right before filing type conversation, but it has a big material impact. Lever number 4, your entity structure. Are you getting the best tax treatment? A ton of owners set up an entity once and never revisit it, but your structure impacts how you're taxed, what you can deduct, and, to be honest, how a future sale could be treated. Many pass-through owners may qualify for the QBI deduction. That's up to 20% of qualified business income. And again, it's not automatic and has limits, especially for some service businesses, but you might qualify for it. And depending upon your long-term plan, like if you're going to sell it, there may be a lot of reasons to evaluate your structure. So ask yourself, are we structured correctly for this income level? Does QBI apply to me? And if I sold in 5 years, does my structure now help me or hurt me? Lever number 5, this is your estimated taxes. Stop letting April punch you in the face. This is the simplest discipline that prevents cash flow chaos. You want to plan for paying throughout the year so you're not scrambling later. The IRS safe harbor concept is basically pay enough during the year to avoid penalties, And commonly 90% of your current year tax or 100% of your prior year tax. And for higher income situations, that prior year number can be higher. So your simple moves are set a monthly tax set aside percentage that you're saving. Review quarterly with your CPA. Don't treat tax money like operating cash. It'll save you headaches later. Lever number 6, check if a pass-through entity tax election helps. In some states, pass-through entities can elect to pay certain state taxes at the entity level, which may reduce federal taxable income. And again, this depends on your situation, and it's very state specific, but it is worth talking to your CPA. Ask them, should we consider a PTE election in our state? That alone will make a big impact if it's true. Then level 7, retirement plans are a tax tool and a hiring tool. Most owners think retirement plans are later, but that's wrong. They're a tax lever, and if you have employees, it can also be a recruiting lever. Options include like simple IRA, SEP IRA, 401k, profit sharing, even with different contribution rules and setup deadlines. There can also be tax credits that help offset your startup costs for certain plans. And if you're a coach, this is one of the cleanest ways to move money into a protected bucket instead of bleeding in taxes. So here's your checklist that I want you to bring to your CPA. Purchases. What can we expense faster this year? Timing. Any revenue expense, timing moves available, is there anything we can do there? 3, loss strategy. Any NOL carrier forward plan, they'll know exactly what that means. 4, structure. Are we optimized? Is there a pass-through QBI that we can take advantage of? Number 5, estimated taxes. What's our plan to avoid surprise or penalties? Number 6, PTE election. Does our state election help us? Number 7, retirement plan. What can we contribute and by when? If you want, just text or comment checklist below, and we'll post this for an easy copy paste process for you. If you take one thing from this video, remember, taxes aren't a once a year event. They're a year-round operating system decision. Run the 7 layers, keep your books clean, review quarterly, and you'll stop getting surprised by bills that were predictable the whole time. You don't need more revenue to feel rich. You just need less leakage. As always, thank you for watching this video. Thank you for being a part of the channel. Leave your comments below, and we're going to help you grow that business one client at a time.